Good morning. Tuesday. Turnaround Tuesday, maybe? April 22nd. Zach Howard. Here's your morning market update. Thoughts to start the day. Yesterday, S&P 500, third of the last 4 days, another down day. And it is pretty orderly. 3% down day at one point. Without the headlines of tariffs and everything else, it's just the jitters of people saying, I want to keep exiting the theater and taking money out of U.S. markets, whether that's treasuries, stocks, or the U.S. dollar. All lower yesterday. 433 companies in the 500 companies S&P were lower on the day. Not the least is the biggest mega cap ones seen here. Those Bag 7 names, formerly known as the Mag 7, NVIDIA, aka FAR 2.0, has lost over $1 trillion in fiat market cap in the last month. It has gone into other assets. And it's going to continue to get repriced as the expectations that were built into the price of some of these stocks and reality meet. What that looks like, don't know. But earnings expectations continue to fall. And we are going to see continuing expectations of guidance coming out here this week with earnings through some of these mega cap companies. And the S&P 500 keeps going lower, reflecting that. What else is on my mind? Gold. Gold continues to do its thing off a weaker U.S. dollar, thanks to larger part to stronger euro, stronger yen. $3,500 US overnight it hit. Yikes. It is getting a bit frothy in the gold space here from a shorter term trade standpoint. Like, gold doesn't usually move like this. It is a currency, has lower volatility. But you come down here and look at GBZ, which is the volatility of gold. It's up here in nosebleed sections for gold, 28. They're usually in this 14 to 16 range historically. But it's trending, clustering, volatility is clustering every look at the volatility on the Russell Small Cap Index up to 50 yesterday. Stayed a hell away from that stuff. Other stuff out there, 30-year yield continues to rise in the U.S. Keeping an eye on that, 4.9% is really a signal of capital leaving that long duration trades, which is those mega cap and those treasuries going into gold and other trades. Not the least of potentially Bitcoin breaking out 88,756 US dollars. Look at the 3 month holding in there despite the sell-off in the mega caps, the QQQs, and all these other high beta trades that Bitcoin has a historical correlation to over the last couple of years. What's happening? They're going to keep watching that. Other interesting things in my notebook. Oil continues to suck. Really playing out this stagflation, disinflationary theme. And I think it's probably more rough patches ahead. Stay cautious. Have a great day. And we'll see you tomorrow.